How's it going, guys? In this video we're going to be going over the bearish butterfly and the bullish butterfly. In this example right here I'm showing you, we'll be doing a bearish one. So right off the bat we're in a downtrend, we have a significant down move. Okay, when we're looking for this butterfly pattern, what we're going to notice when we measure this down move from high to low, right, we're going to notice that the retracement comes in literally right at the 786. Okay, so this B point has to hit the 786 for the butterfly. Okay, so X, A, B. All right, so you have to have an impulse leg to the downside or the upside, right, depending on the situation. And then your retracement for the B point has to be a 786. Okay, it has to be a 786 for a butterfly pattern. Got it? So when you actually see the retracement here at the 786 and you actually have price bounce off but fail to break this low, the alarm should be going off in your head right away. Okay, this B point has to be a 786. All right, this C point can be a 382 all the way up to an 886. All right, so let me do measurement from low up to the high, and what I'm going to do is I'm going to add in the 886 all the way up to the 382. All right, so this C point has a range. Okay, as long as it does not break the low. All right, if it breaks the low, then it's invalidated, right? It's not a butterfly. All right, so depending on the situation, this C point is going to come in anywhere in here. You would like to see obviously a 618. That'd be nice to see, or 786, and you know it's strong. It's going to bounce strongly, but let's say somewhere in the middle right here. So say somewhere in the middle, because it's not as important as the D point or the B point. Okay, the C point is not as important in this example. Okay, so we know the B point has to be a 786. This C point can be a 382 all the way up to an 886. All right, so it can range here. All right, so don't get confused. It can range. All right, but what does matter is this. All right, so for a butterfly, we're going to get a 127 extension over the X point. All right, so this is the X point. X, make it bigger. X, A, B, C. This D point, we're going to see where it's going to finish, okay? So the alarms go off in your head when you see that 786 retracement, and then it bounces off of there. All right, and then it fails to break the low, and it starts climbing again. That's when you're going to see, all right, if it breaks the B point, then I'm going to start looking for that extension to see if it's going to break. When it breaks the X point, for sure you're going to get some type of extension pattern, right? So for a butterfly, the ABA, ABA extension has to be a 1618. All right, has to come in near the 1618. All right, for an ABA. All right, this is for a butterfly. All right, right now I'll pull out the AXA and we'll get the 127. All right, so pull out the Fibonacci. Let me add in the 127. Okay. Start. Okay, so I'll pull out my Fibonacci extension tool. Now I'll do the AXA. A. Up into X, back into A. And what you're going to notice is the 127, like butter, like literally lines up like a glove. Look at that. You get the exact point right there. All right. So what does that tell us? That tells us price. This is a strong resistance point right here in the market. Okay. Very strong resistance point, and then we're going to look to sell right there. Okay. And then your take profits once you actually look to go short in this zone, right when it touches it, where you get rejection off of it, you start looking to go short. Let me code this differently. All right, so where is our take profit going to be? Remember, A to D or C to D. C to D is for conservative traders, and then A to D will be for a little bit bigger targets. All right, so A all the way to D. Actually, let me do it over here. I'll do it right here. A up to D. All right, so our first take profit would be 382. Let me put in our second take profit. 618. Take profit 1, 382. Take profit 2, 618. All right, of A to D. Makes sense, guys? So let me actually connect it so it actually does make sense for you. So you can actually see it visually. X, A, B, 786. Remember, 786 is going to give us a clue that it's going to be a butterfly. 786, 618, and then our extension was a 127, AXA, and an ABA of 1618. Okay, makes sense. So for the butterfly, it could for the ABA, it could be a 1618 or a 224. All right, so don't get confused. Just in this instance, it lined up perfectly with the 1618. But ABA can be a 1618 or a 224. All right, whatever's closer to the 127. Got it? So pause it here if you're having trouble. XA, B retracement 786, pull back. C can be 382 all the way up to 886. But the extension for a butterfly has to be a 127 AXA and an ABA of a 1618 or a 224. Our take profit targets, once again, A to D, 382 and 618. A to D of the full move to the upside. All right, and if you're a conservative trader, your take profit targets will be C to D, once again 382, 618. All right, I use A to D. All right, but if you're going to use A to D, use that every single time. If you're going to use C to D, use that every single time. Okay, be consistent in your approach. All right, so conservative traders, C to D. Other traders, I don't know if you want to call them conservative or not, but it's going to be A to D. Okay, so there's two different ways to get your take profit targets, all right? So now that we exhausted that, let's actually go into an example, and I'm going to start breaking it down for you guys, all right? So let me pause it for a second, and then let's actually go to the charts, and we'll get started on a real example. Okay, guys, so in the pair we're going to be looking at is NZD USD on the 4-hour chart, all right? This is where I spotted the butterfly pattern that you might have seen in the other video, but we're going to go more in depth into it, okay? So check this out. You see this right here? You see how you see this big down move? We see a deep retracement, and we see another down move, fails to break the low, and then we get a break of this point, and then we get a break of the high. All right, there's your clues. My first clue looks like this is a 786 retracement. Let's check. Fibonacci, high to low. We add in the 786. All right, this is all measurements, guys. I'm not lying to you. This is repeatable. You're going to see them in the market. You're going to see these patterns in the market. All right. Just got to know when to be alerted, basically. When you see the 786 right there, you see how you see that? You see a big down move. You see a steep retracement. And then you get that 786, and then it bounces off of there. But then it fails to break the low. Alarms go off right away. All right. Alarms go off right away. All right. So we have a 786. B point. Measure my A to B. We gotta be exact here. You add in the 618. It comes in at 618. So just like our example, came in at the 618. All right. So let me draw in the arrows so you guys can follow along. So we have our XA. I'll change it back to blue. So let me look at our drawing. So we have a down move, pullback. Once again, what's important about this pullback? 786. That's when our alarms will go off, right? When you see that 786 retracement, and then you're going to get that pull off again. Right, so we bounce, hit the 618, strong support. We're going to start looking for that D point. Where's our D point going to come in? All right, well, let's start projecting. All right, I'm not gonna line it up just yet. All right, put the arrow there. We're expecting to that X point to break. All right, we're going to see how far it's going to break. Start measuring it out for our butterfly. ABA, what do we say about ABA for the butterfly? 1618 or 224. So let me do it. A, I'm going to do it up to this high, B, A. Right. This is for the ABA, so we don't need the 127, 1618, and the 224. Okay, we see the 1618 literally right there. I'm sure if I adjusted this right here, watch, if I adjust this extension, adjusted just a little bit right to the 786. Right, so ABA. Right, if I tightened it up just a little bit, you can experiment around with this, but in this instance, we want to be exact on the 786 for the extension. And notice the 1618 came in right there. All right, so it's looking good. Now, let's do our AXA extension. A, X, back into A. It's going to be a 127. Oh my goodness, look at that. Literally lines up like too perfectly to me. So you can see them both. Boom. Look at that. That's artwork, guys. 127 lines up with the 1618. Perfect. Alright. And if you did the extension the other way, no big deal. Check this out. If you did the extension like this, the ABA, it's fine too. All you would do is put your little zone right here. Alright, you know that's a kill zone. Alright. But if you did the extension like I told you right here, line it up perfectly on the 786, we'll see that those two Fibonacci numbers line up. It's called a Fibonacci cluster. And as you can see, if you took it short, literally when it touched it, pretty much no drawdown, and take profits got hit. Let's do our take profits, A to D. All right, so let me draw it out first. Taking it slow, guys, because I want you guys to understand. I don't want to rush you guys. XA, B, remember B, 786. That's when the alarms go off in our head. We might get a butterfly pattern. C, and our D points will be right here. All right, so let me extend the arrow. Boom. Just like what I showed you in the beginning video. What happens afterwards? Beautiful drop, guys. I mean, these are the type of patterns, like once you spot them, guys, that, you know, and it actually behaves, you get these beautiful no drawdown trades, or you can just go hard on them. Alright, so this is the reason I trade these patterns. Very accurate, especially when they line up like this. Like, it's beautiful. Let me zoom in for you guys. So, yeah, I'll pause here for a second. This is New Zealand dollar on the 4-hour chart, October 12th last year. Alright. So let's actually do our take profit targets now, like we would be doing in real time. Okay. So we go like this. There, you see how price rejected off the art zone right here? That's when it looks starting to look short. All right, stop loss above the zone. All right, above the high and above the zone a little bit. Protect yourself. Okay, so let's do our A to D targets. Take profit targets. A up to D point. All right, I'm gonna do it up to the wick, so it's a full move. 382 and 618. Fix it up. Take it real slow for you guys. I want you guys to understand. All right, A to D. Check it out. 382 got hit. Take profits got hit. Okay, so we entered off this zone. First take profit got hit, 382. As soon as it breaks that zone, 382, as soon as it breaks that take profit, we're going to aim for our second target, stops roll to break even. Alright, so if you have two orders here, you would take profit on one of them, 382. You leave another order in, and then you would move your stop loss to break even. Risk-free trade, let it run to the 618. Alright, take profit, boom, hit. Beautiful, right? Beautiful trade, beautiful setup, absolutely gorgeous. Alright, so if you want to see another butterfly example, go to my video. It's probably going to be below this one, the GBP USD video where I show you a butterfly pattern. That's a way bigger butterfly pattern, but as you guys will see that everything lines up. All right, everything lines up. All the ratios line up perfectly, and I took that trade, literally pretty much no drawdown, in and out, real quick, 4K. Yeah, you guys can check out that video. So, I mean, that's the butterfly pattern, guys. I mean, I don't know what else I can say about it, besides the fact that this zone, all right, this ratio cluster right here is a strong resistance. So even if, let's say on the 4-hour chart, it spikes up above, as long as you get a daily chart close below the zone and below that Fibonacci cluster, you're good to go to take the pattern, all right? All right, it's very simple. The pattern is valid as long as it doesn't close above on the daily chart or the weekly. All right, if you have those big patterns, obviously the weekly, but usually for the 4-hour patterns, like the daily chart's a good indication. All right, it's gonna close below. The zone is still good. We're valid. We're good to go. Let's take it. Boom. All right. So if you like this butterfly pattern and you want to know more about it, go to that GBP USD video, and that'll be another example. All right. So pretty simple, guys. Once again, just do your homework, do your studying. Remember, the B point has to be a 786. All right. That's what gives us the clue that there's going to be a butterfly. Okay. And then the X point breaks. And that's the biggest clue. The X point breaks, and then you measure out how much that break is. All right. That's when you get those Fibonacci magic. Okay, guys. So on to the next pattern. Probably the next pattern I'm gonna do probably be the shark and the bat. Probably. All right. I think I have to go over the Garley as well. So on to the next vid. Peace.